This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, May 5th, 2015. Euro dollar. So euro gains have since stalled out after breaking above neckline support the other week of a double bottom that could project gains all the way up back towards the 115.35 area. Gains right now is stalled out around 112.90 thus far, ahead of this latest minor pullback. But look for the previous neckline resistance now to act as support. That comes in around 110.50 in favor of a renewed upside towards that double bottom objective. If, however, the market can't sustain above the neckline and breaks back below recent lows at 109.60, that will negate the possibility for this double bottom objective, and it'll put the pressure back on the downside towards a retest of that critical 12-year low going back to March at 104.62. Sterling dollar. So cable has pulled back quite sharply after stalling just shy of the 2015 peak at 155.52, though the market is going to come into some solid internal support around the 149.50 area if you look back to those lows that we saw on the 23rd of January. At this point, it's a bit of a wait and see if the market can be supported down towards 149.50 or ahead of there, or if the market continues to look to push back higher towards the recent 2015 high at 155.52. Ultimately, though, the broader downtrend does remain intact, and this does favor an outlook that sees the market trading lower over the course of the medium term. Dollar yen. So dollar yen continues to trade within a consolidation over the past several weeks and months, with the market locked within some sideways trade roughly between 118 and 122. At this point, any rallies seem to be very well capped ahead of 120, above 120, while any setbacks are very well supported ahead of 118.23. At this point, it's more of a wait and see if the market can break above either level or either side, or sustain gains above 122, sustain gains above 120, or break down below 118. But ultimately, with this market, the broader outlook continues to favor the top side given the intense bullish trend, and a break above 122 is favored towards the 125 to 130 area further up. Really only back below 115.55, the low from December, would compromise this constructive outlook for dollar yen. Euro Swiss. So Euro Swiss continues to trade within a recovery off recent lows that we saw at 102.35, and this should continue with the market now looking for a higher low ahead of the next major upside extension above the recent highs that we saw at 105.25. A full retracement back to the 108.15 high that we saw back on the 20th of February is favored, while only back below 102.35 would negate the current recovery outlook. Aussie dollar. So Aussie has been trading with a bid tone over the past few weeks and spacing out by fresh multi-year lows at 75.33. But ultimately, this market remains locked within a downtrend, and any rally should continue to be very well capped ahead of that previous support return resistance around 80.33. We did see a brief spike up to 80.75 last week, but the market couldn't hold above 80.33 on a daily close basis. And so while we hold below 80.33 on a daily close basis, the bias continues to be for an immediate bearish resumption back down below 75.33. So again, any rallies that we see on an intraday basis should be very well capped ahead of 80. And dollar CAD. So dollar CAD had seen a nice little pullback since breaking down below 123.50, but the break opened the door for a measured move into the 11900s that has now been completed. And from here, the market should be very well supported in favor of a bullish resumption, eventually back towards those plus 5-year highs at 128.35 this year, and towards the 2009 peak at 130.65 further up. Kiwi dollar. So Kiwi looks to be rounding out the next medium-term lower top ahead of a bearish resumption back towards and eventually below the recent lows at 71.76. At this point, really only a break back above 78.90 would compromise or delay the bearish outlook for Kiwi. SPX 500. So the S&P 500 continues to consolidate just off recent record highs that were set the other week at 21.26, but the market hasn't been able to muster any gains above that 21.26 high, and really is holding below the previous February peak that has recently been broken at 21.20. At this point, the market's going to need to establish a close above 21.26 to convince of a bullish continuation, while inability to do so will keep the toppish prospect intact and open the door for a resumption of for fresh declines down below recent lows at 2070 and towards more critical support at 2040 further down. Gold. So although we saw some quick setbacks in gold in recent sessions, the market remains supported on a daily close basis above recent lows at 1175. This keeps the basing outlook intact, with the market now favored back towards recent resistance at 1224. A break above 1224 would open the door for a more significant recovery back above 1300. But inability to hold above 1175 on a daily close basis will put the more immediate pressure back on the downside and expose that 2014 base at 1131.